Welcome back to the Market Wolf. I am the Market Wolf. This is a very important update, so please make sure to watch the whole thing. If you're new here, please like and subscribe. If you're not new here, thank you for returning and thank you for sharing this video and being a subscriber. I am very grateful to all of you and the comments. You've been wonderful. Just want to say, remember that volatility, we're above that 20. So if you're looking to trade, it's going to be chopped, so be careful. But take a look at our overall thesis and recall that we believe we might be in a symmetrical triangle here and that volatility could be tightening up and that we're either going to break up or break down. And if volatility breaks up, of course the market is going to break down. And if volatility comes down below that 20, the market could really begin to break up. I'm going to lay out for you today either the beginning of a melt up or a melt down scenario. The beginning. So, as I was looking at the larger picture, I came across... That is okay. I came across some information that you may find interesting. First of all, let's just take a look at the weekly. Remember my last video, I let you know I'm bearish here. We're still inside this channel. This week we could end up in this channel below here where we had this quick wick down in February. We also spent a couple other weeks down there in this kind of scary territory back where the last crash was. So this channel is sucking us down, and really I gave you the bear case for that for this coming week. So pay attention to that. Now that doesn't rule out the fact that we could get, a bounce. So watch out for those reversal patterns that can play out. Go check out that video from last time. What I want you to pay attention to here is look at our breakdown from 2020 rather, and you see we were in this upward channel and we've never made it back on top of there. I want to do a measured move down so you can see what a big breakdown that really was over those weeks. Okay, so about a 32% breakdown, and we're on the weekly here. So from the top, we have this gap down. So 1, 2, 3, 4, about 5 weeks, and then on the 6th week we hit a bottom wick here and started to bounce back up. So roughly about 6 weeks of this kind of action. So remember, this doesn't happen all at once, and the case I'm going to be describing to you may take that long. We don't know. We'll have to watch and see whether we melt up or melt down. So let's take a look at the SPX, which is the S&P 500, okay? But this is just, instead of being, really it's in dollars, and it's times 10. So that's why you see the price difference here, but still the S&P 500. And you can see the similar pattern developing here. And I've done a measured move breaking up and breaking down. Now breaking up, this would be actually possibly worse really than breaking down. I'll get into that in just a moment. But the reason we might break up, and this is what, if you're a bull on UVXY and you're hoping to make money on the downside of things with volatility, you need to also be aware that we could break up. And that scenario plays out if the Fed fails to get inflation under control or really doesn't make any moves to truly do it. And that's something that we have to watch very, very carefully. The breakdown scenario. Well, that's obviously when we get into quantitative tightening and the Fed actually doing what it should be doing, which is raising interest rates. Of course, we know they're stuck between a rock and a hard place because if they do that, they are in trouble. If we were to take a measured move from price right now, if it just broke from the middle, let's say, even if it was in October, it doesn't matter. Most crashes happen in October, right? We see that we're at about let me see. Difficult to tell. About a 21, almost 22% drop there. That'll be the same measured move up. So, a 22% drop is fairly significant, but you have to remember that drop could also occur from one of these wicks down here, potentially, still within this symmetrical in October or somewhere in there. It would break a little higher, obviously. the further you get tightened up inside of this symmetrical triangle. Now, let's take a look at what that would mean at about a roughly, from price right now, let's say a roughly 22% drop. What does that mean for us? Well, a 22% drop from price right now puts us back at about the $340.35 level. You can see that there is some price action over here in this area where we could actually settle in, okay? If we had a melt up, if we eventually come out of one of these channels, let's just say that we're at the bottom of this channel for now, since that's where we are. 22% up. Let's see. Let's make it September. Yeah, we just make it back to the top of this channel, really. That's what would happen. So we wouldn't even break back into this channel yet, but we could have higher highs at that point very easily. We could break back up into this old channel. Now, the reason that this is bad, if we were to, we're really not in a good scenario either way, because if the Fed decides not to fight inflation, then what you're going to see is on this move up, not only going to see a move up with the price, that measured move up, right, where let's just use where did it go? Where did it go? Where are we at? Here we are. Okay, so let's just say that we have that move up. It's going to build to look something crazy, to be honest. I was hoping that's not the pointer I was looking for. But whatever. You would just see explosive growth, perhaps even outside of this channel. You would see periods of cooling, but more periods of bouncing up, and because this is what happens with hyperinflation in other countries. If we lost the reserve currency status of the world, which we very well could, things are not looking great. Then you would see a melt up where even if you were profiting in the stock market, you might be like, oh, well, that'd be great. That'd be awesome. But you're not going to be able to keep up with the inflation rate. Even if you're making massive profits, you're not going to be able to keep up with the inflation rate. So at that point, you look like some of these other countries in the world like Venezuela. So breaking up, not necessarily the best thing in the world. Breaking down, not great either, but at least it gives you something to build on if they could somehow pull a hat trick here and actually turn this thing around. But at this point, I really don't know how they could. So just be aware that there could be a break up, and you have to keep that in mind as well. This is a 70-year cycle, which I've been looking at, and I haven't fully studied up on yet. I've just started. But and don't pay attention to any of this up here, because this is all theory, right? This is just theory. That doesn't mean anything for us necessarily right now. So keep those things in mind long term. We could break up. We could break down. You have to keep an eye on it and know what you're looking at. It all comes down really to Fed policy at the end of the day, and some of the world events that we're having. Tensions seem to be escalating further with Russia, and Russia's not too happy. So I would guess that we could definitely continue to see the VIX on this upward trend in the coming weeks. We may break back at least into this channel just above 30. That would be very good for those of us that are in UVXY. And remember, you can play it both ways. You can play UVXY as volatility goes up and as it goes down, just depending on if you're going to do options or not. So that about wraps it up. Just wanted to give you the broader view of what we're looking for. I had fun doing this. I hope you enjoyed it, and I will see you next time on The Market Wolf.